The Nigerian economy in 2025 offers a mix of promising opportunities and significant challenges. While positive economic prospects are anticipated, including potential improvements in inflation, exchange rates, and growth, navigating a path to sustainable recovery requires careful consideration and strategic action. This conversation draws upon insights from PwC's report on Nigeria's 2025 budget and economic outlook. To delve deeper into key economic themes, we will analyze the factors driving the economic trajectory, examine critical issues and potential roadblocks, and explore the opportunities for the nation, Nigeria. Well, joining me for this, I have Kenneth Erikume, partner, PwC Nigeria. Thank you so much for joining me today.
Hi, Perpetua. Thank you for inviting me.
All right, it's always a pleasure to have you on the show. Now, talk to us. I'd like us to begin with the Macroeconomic Dashboard in 2024. Talk to us about the impact it had on businesses and individuals.
Right, thank you very much for that question. Last year we had muted GDP growth. I think that was one of the most important aspects in terms of the dashboard. In the region of about 3.46% GDP growth. Now, the GDP growth is important because what it tells you is how people become wealthy or how people are driven into the poverty bucket. Because the faster your GDP growth goes ahead of population increase, means that the GDP per capita becomes much enlarged, and that then sustains the wealth, or it's an indication of the wealth of the people. And there's a saying that businesses grow as far as their environment grows. So it's also an indication of how much challenges businesses have faced. In particular, the biggest shocks there was the exchange rate, the devaluation that we had in 2024, which was in the region of 77% or 78%, largely driven by the monetary policies of the CBN to ensure that we harmonize rates. And that also cascaded into inflation, and of course, triggering other monetary policy responses from the central bank, like the increase of the monetary policy rate. Now, if we stay on the exchange rate devaluation, because in my view, that's the most strategic, right? The most strategic issue. It then translated into, inflation from a price perspective. Remember that Nigeria is largely an import-dependent country. So everything from food to clothing to petrochemicals are usually imported. And then that just, meant that it puts pressure from an inflation perspective. And that's why we ended the year close to 35% in terms of inflation rate increase. Of course, the impact it had on, the double whammy, where the government has also removed fuel subsidy, meant that energy prices, particularly for PMS, it had a cascading effect, which also drove energy inflation and transport inflation as well. So when you look at all of these things, it was a challenging year for businesses. And businesses are looking forward to 2025 if there will be any solace in the future. From our perspective in PwC, we believe that the most challenging times are behind us, and the future outlook is more stable.
Okay, Mr. Erikume, I can't hear you. Maybe you're mistakenly muted. Can you check? But of course, I think we're good with what you just told us. Now, you've identified foreign exchange stability, price stability, and interest rate as essential, monetary issues of focus in 2025. Talk to us about your expectations for all these in 2025. All right, I guess we'll have to take a break and get that fixed, but we'll return. We will continue this conversation with Kenneth Erikume. Stay with us, don't go away.
No worries. Thank you, Perpetua, for not abandoning me.
I wouldn't do that. Okay, so before we went on that timeout, I was telling you to give us your outlook for foreign exchange stability, price stability, interest rate, and some of the essential monetary issues, really.
Right. So I think, like I said, exchange rate for me is the most strategic, right? And the outlook for us from a PwC perspective is that it's looking more positive. And why do we say that? I think the first thing is the improvement in terms of the balance of payments indicates that we may be having certain net trade surplus. And when you look at that or try to interrogate that, one of the areas that we actually expend a lot of foreign currency is in the importation of petrochemicals, which is between 30% to 40% of our imports. The coming on stream of the Dangote refinery, as well as the coming on stream of some of our already existing refineries, allows us to ease that pressure, as well as some of the policies around government to improve our exportation. So that's one angle. The other angle is around our diaspora remittances. Between January and October 2024, that increased by 61%, which contributes markedly into our ability to meet the liquidity demands for foreign currency in the country. We also saw particularly foreign portfolio investors coming in because Nigeria government bonds and treasury bills offered, relative to other jurisdictions, some healthy returns for investors. So we saw that improvement as well. But for me, one of the most important is actually the focus from the central bank at improving the transparency around foreign currency trades in the country. And they've done quite a number of interventions in this regard. And the most important one that came in December saw a shift in the exchange rate. And that's from the electronic foreign exchange matching system, which brings more transparency into the market. They want to overlay on that with the code, with the governance code that they want to introduce for authorized dealers and participants to ensure that they comply with strict governance requirements when they are trading in foreign currency. So those things, as well as an improvement in production of crude, helps us to ensure that there's more liquidity in the foreign exchange market. And you can see some of the impact in terms of the growth in our foreign reserves, which has gone up to $40 billion. And what people are saying is that gives the central bank more ability and stamina to actually sustain the market and defend if need be. So for me, I think that gives a positive outlook on exchange rate. Now, in terms of prediction of where things land, that is a bit of a complicated matter, particularly with what we've seen in the global stage. So one of the things, in the 2025 budget, which we all anticipate is already achievable, is the benchmark price of $35, because several economists and analysts have said that is where crude price would land. But the challenge is that there's also been disruption from a geopolitical perspective, from the Trump administration. And three things makes that to be risky, in terms of looking at, what the price of crude will be. The first one is President Trump coming out to say that, parties, the OPEC, must come together and force a reduction in crude oil price so that, Russia can come to the table to end the war. And for me, that's particularly interesting because what that would mean may be that, some of the predictions around the crude price, may be at risk.
Let me come in here, Mr. Erikume.
Could also have an impact.
Mr. Erikume, let me come in here. Talking about that, I would say that Trump's preference for, lower oil prices is actually a double-edged sword for Nigeria. So I'd like you to look at the two angles, for us.
Yeah. Like you rightly put it, it's a double-edged sword. But before I land on that, there is also the bit around stability in the Middle East, right? With some people, hearing the whispers from the White House saying that Trump is interested in the Nobel Prize for Peace, may intervene in the Middle East, which may then, bring more stability. And that the Middle East, once there is a bit of disruption in the Middle East, oil price shoots up. Now, when you put all of these things together, it may mean that crude price may drop. But like you said, that's a double-edged sword for Nigeria because, I mentioned already that 30 to 40% of our imports is petrochemicals, right? Now, there is a sweet price point for us in terms of crude price, on the basis that, we import quite a number of our petroleum products. If the price of crude is high, it means that, that then translates into significant, takes up a lot of the liquidity we get in terms of foreign exchange, but even the impact in terms of petrol price. You've seen all of that happening in December, where several stakeholders have come out to say the reduction in petrol price is simply a reflection of the, the global market. And the most significant of that is the price of crude. So for us, it's a double whammy or a double-edged sword, like you put it, because it could then mean, if the price of crude drops, our, foreign currency revenue would drop. However, the price of PMS would drop and how we expend foreign currency would also drop. So it then gives us an advantage. So there's a sweet price of crude. I don't know what that is. The NNPC has come out in the past to suggest certain prices where, if it drops low enough, that would be the sweet spot for us. So it's not something to be wary about. It's just to ensure that, in terms of the permutations and simulations, we find that sweet price point.
All right, let me come in here.
Again,
okay.
Yes.
You can land on that, and then I'll come in at that point.
No, so what I was just trying to say is that, again, some of the benefits from the refinery depends on how we acquire the petrol from the Dangote refinery, and there was a bit of disruption around that, whether we'll be buying in Naira, how much are we buying, and then the petrol marketers and all that. So, like I always say, an intervention is required in that regard to ensure that there is, that happens smoothly, and some of the products that are generated from the Dangote refinery gets into the domestic market. Already, the likes of Ardova and MRS have signed up, offtake agreements, so that's positive.
All right. I mean, I would have continued, but I think we need to move very fast. So you recommended 7 key issues for consideration in 2025. I'd like you to, talk about especially the broader fiscal policy focus. Help us to unpack that.
Yeah, so from the broader fiscal policy focus, I think the most material thing is our debt sustainability. So when you look at our debt stock at the moment, it's around 142 trillion naira.
That's as at Q3.
When you compare that with, sorry, say that. So
that's as at Q3 2024.
Q3 2024. I mean, I don't know what Q4 is, right? And if you look at that as a ratio to GDP, that's in the region of 50%. And the 2025 budget anticipates that we could have more deficit. Of course, there's obviously going to be more deficit, and therefore government is going to borrow even more. When you unpack the 2025 budget as well, and even the performance in 2024, a large chunk of our expenditure goes into debt servicing, payment of the principal and the interest. So for us, that has to be an important focus of the government leading into the future. And the only way to address that is through revenue. And one of the things I tell people is that the 50 trillion naira or almost 50 trillion naira budget is not unusual for a country like Nigeria. If you do the math, when you combine all the budgets of the central and the subnationals and all that, the budget per head is about $200 or $206 per citizen. Compare and contrast that with the likes of Kenya, which is around 500 and something dollars, and even South Africa, that's upwards 1,500. It shows you that the budget size is not sufficient to deal with the requirements and needs of Nigeria. So government needs to ramp up revenue to be able to ensure that we meet that debt sustainability. And one of the things that has been ongoing for a while is the bills, the tax bills from the Presidential Committee on Fiscal Reforms and Tax Policy, which is currently at the National Assembly. And there is a belief that would unlock quite a lot in terms of revenue. Of course, the monetary policy alignment is also an important part as well. And this means that, the monetary policy has to align with the fiscal policy, particularly at a time when Nigerians, have sacrificed in the past. The tightening of interest, is not sustainable. So government also needs to look at that and ensure that, the monetary policy objectives, they are achieving their objectives to some extent, but you also need to give, businesses some succor because, they're being squeezed significantly, particularly in the real sector. And then, just ensuring that some of the reforms that have come through, translate into a stable economy. Of course, citizens have been demanding largely that government needs to also become more responsible, right? So it's not just about generation of the revenue, ensuring stability in the market, but for every dollar that government spends or naira that government spends, does it translate into, significant return, or is there inflation? When I say inflation, is the budget, is the expenditure, prudent, right? Are there leakages in the process that doesn't ensure that those funds translate into quality projects for?
Okay, Mr. Erikume, just before you move on,
those would be crucial things.
Just before you move on, I want to get your reaction to this. I mean, Taiwo Oyedele was talking about how that the MPC's preference for hiking interest rates actually affected inflation, made it higher. And then we also remember that the CBN told us that they were targeting 21.4% in 2024. That did not happen. We had 34.8. Now the question is, I want to believe they made that projection based on some simulation or some data they were relying on. Doesn't this point to the fact that maybe there's something wrong with the data, or something is wrong somewhere? Because if you thought that based on your inflation targeting and all of those things, you're going to achieve a particular number, but at the end of the day, you even go much above, then something's wrong somewhere. Should this CBN own up and maybe apologize to Nigerians or something?
I wouldn't say apologize. I mean, it's a tough job. I think that's one of the things we need to realize. And predicting the future is one of the most difficult things you can ever do. Right? Nobody has the crystal ball to say this is where things will land. But you see, when the government, went into those two reforms, ensuring harmonization of the interest of the exchange rate, as well as the removal of fuel subsidy, they perhaps did not anticipate, the fact that the parallel market will continue to expand or grow, the price will continue to grow faster than the official market, and the official market will be playing catch up. I think that was perhaps one of the areas where they were blindsided.
Blind spot.
And that therefore meant they had to react from a monetary policy perspective. And the only thing you can do, as you would see in many countries, is really to tighten, to increase interest rates. But you're right, the interest rate, increase in interest rate has ripple effects, in terms of the economy. Manufacturing sector, for example, you ask yourself how many people in the manufacturing sector get a return on their of their investment at up to 27.5%. It's very few. So it therefore means that a lot of them are struggling in terms of their capital requirements.
Okay.
Because then they have to be servicing debt instead of going into expansion.
Okay.
And then that has a ripple effect in terms of spending power and so on and so forth.
There's a lot to really talk about, but let me just come to this now. You don't appear bullish on Nigeria's debt sustainability, and you have also, highlighted privatization, sell down of assets as options. So I would like you to talk to us about this.
Yes, so traditional revenue sources, obviously will not meet up with the demands. So, of course, reforms are required from a tax perspective, and that already is happening. But one of the things that, one of the strategies that governments or countries across the world use when they find themselves in this sort of situation is to use a short to medium term approach that allows them to mobilize returns from their existing assets. Think of a typical rich man out there that has assets. The assets will not be sitting down idle. Many would demand at least 15% return on investment on those assets. And the biggest owner of assets in the country today is actually the government. And so government has to think of how do we extract value from those assets. We have significant oil and gas reserves, and as much as possible, mobilizing them, getting the signature bonus on those will be important. There is also real property and landed property owned by the government across the country. And ensuring that those, they go into public-private partnerships to ensure that, those assets give some liquidity in the immediate term. Sometimes government also needs to look at securitization of those assets. And government has done a bit of that in the past, or at least NNPC has done a bit of that in the past, committing future crude for immediate cash and using that, for capex. But government has to go through that process of identifying all the assets within their portfolio and ensuring that those assets deliver value and return to government. Government has to think like a private sector participant at this point in time, because there's no business today that would have significant assets sitting in billions of dollars and will not be optimizing return. So for us, we think that that is important and one of the crucial elements to ensure that government is able to generate revenue in the medium to short term, while some of the transformation that needs to happen in terms of making government a bit more clinical and efficient in delivering value per expenditure can come through over the medium term.
Okay.
So for me, I think that, and of course, government cannot hide from borrowing, but, the level of borrowing has to be managed now. Otherwise, like you said, it would have inflationary impact going forward.
Thank you so much, Kenneth Erikume, partner PwC Nigeria. Thank you for your thoughts and your time on Business Edge today.
Thank you, Perpetua. Nice speaking with you as always.